Hello and welcome to Car Dealer Live. My name is James Batchelor. Today, the listed dealer group Vertu Motors has published its half-year results. A whopping profit before tax of £51.8 million. That's more than the H1s of the two previous years combined. I'm going to talk now to talk a little bit more about this is CEO Robert Forrester. Good morning, Robert.
Good morning, James.
Robert, I mean, first of all, an absolutely stunning performance. It was great to see the results come into my email box this morning. How on earth have you managed this?
Well, I mean, the business is a good business. Don't get me wrong. I mean, we've got good management and we work very hard and we've got good strategies, but you have to accept that the sector has seen unprecedented tailwinds. The way that the supply constraints in new cars have affected both new car margins, but predominantly used car margins, has led to a complete step change in profitability. I think the business did well in terms of strong pricing disciplines to try and maximise the situation. But if you actually look at the results of our competitors, they've also been very, very strong. Now, I think we've held our own, if not done better, probably, hopefully. But, you know, that we can't just say suddenly we found the magic money tree. This is very explainable when you look at the market dynamics.
Yeah. And I mean, what are the main highlights for you?
Well, I mean, obviously, number one, the profitability, but with that profitability, the cash generation. We had free cash flow of £63.6 million. And we had a strong balance sheet with no debt when we came into the period, but we've come out with a net tangible asset per share of 61.5p, which means if you closed everything down and sold off all the assets, you'd end up with 61.5p, which is actually more than the share price. So I think that shows just how strong the balance sheet is, and that provides us with, we've estimated and put it in the announcement, you know, £90 million of funding to spend on acquisitions if we wanted to. So I think that's an important point. The second area is we've done a lot of work on digitalisation in the period. That continues, and every time I have a discussion with anybody, it leads to a technology project. So we've outlined in the announcement, you know, we're launching a big TV campaign to launch Click to Drive, which basically, along with Bristol Street Motors, the advert will have Bristol Street Motors, but here's what we can do online. Here's what we can do in terms of technology. And we're launching along with that our concierge personal shopping service so that people online can get help of a person to, you know, get them a video of the car, talk them through any problems, any questions, and try and increase the conversion of e-commerce, which is, you know, very, very low. I mean, e-commerce used car conversions are less than 1% in the sector at the moment. So we think concierge will help. And that's an idea we've taken from the US. So I think that's probably the two major factors we've got. With this morning, we've re-established the dividend, which paused during the pandemic, and recommenced the share buyback program. So I think they're two interesting things. And I suppose when we move into, you know, the other astonishing thing that's happened in the UK over the past 6 months is just how tight labour markets are. I mean, you read it in the newspapers all the time, you know, 1.1 million vacancies in the United Kingdom. Where's everybody gone? Well, they haven't gone to Europe because we hadn't got a big European workforce to kick off with. But, you know, we have had a very high level of vacancies in the last 6 months. We've been growing the number of jobs, but we've got around 500 vacancies, and it's just not sustainable. So we have taken the bull by the horns, as it were, undertaken a full review of pay, which will be complete actually 1st of December, 1st of January, to make sure that we are at the head of the market, able then to recruit the numbers of people that we're missing, able to retain. We're also launching, we've always been very significant in terms of apprenticeships and degree apprenticeships, but we've decided to launch a new programme for service advisors. So we'll be recruiting 120 modern apprentice service advisors in Q1 next year. And you put all that together, and that the pay and the apprenticeships, and that's about a £12 million investment, which is a significant sum of money. But offsetting that investment should be high levels of gross profit, high levels of customer experience, and, you know, a sustainable business going forward. And we can't shirk away from the reality of that is where the UK economy is.
Yeah. I just want to pick you up a little bit about online car sales. Now, as we've seen from one online used car retailer very recently. They made a loss. We're all talking a lot about that. You've pretty much shown that people still want a hybrid, don't they? They want to have all the tools online, but they also want to go into a dealership. That's very much where you're heading, isn't it? And in your mind, is that where the industry's heading?
Well, we did some customer research, massive samples actually, with MediaCom of our customer database who bought. Actually, we're now doing the customer database that didn't buy, and that'll be interesting to see. It's a different one. In fact, my mother got one of the didn't buy surveys the other day, which was hilarious. And 4/5 of our buyers want a test drive, want to go to the dealership, and use technology. Don't get me wrong; they'll definitely use the internet. I think very, very few people do not use the internet for some degree of the process. And our technology allows the customer complete flexibility. I mean, there are some striking facts when you talk about online. And I was listening to the radio this morning and I heard a Kazoo advert. They are clearly spending millions and millions and millions of pounds. I mean, you could almost name the football clubs that aren't sponsored by them. It would be a lot easier than actually the ones that are. However, when you look at the economic reality, we have a conversion ratio in car sales of about 30%. So we convert about 30% of the inquiries. Online e-com, and these are their numbers, and actually they mirror our numbers, has a conversion ratio of 0.8 of 1%. So if you go and spend millions on marketing and you get 100 customers at the top of the funnel, you will sell not one car. Because actually you can't sell 0.8 of a car. No. Actually. So broadly, let's call it one. Now, you've got to spend a lot of money to sell one car. And that doesn't look like a good business model to me. And actually, if you look at our numbers, and I think we're pretty good at online retailing, pure online. We sold 681 cars, used cars, out of 50,000. Yeah. So, I mean, I'm fairly outspoken on the subject, as you know, but I mean, my view is there's no point them having dealerships dotted around the country, which they've definitely got, if they don't allow people to visit them and do test drives. Exactly. Actually, that's what the customers want. So you can go down this online route all you like, but the bottom line is you've got to give what the customers want. Yeah. And the customers want a test drive, particularly as we move into more and more electric vehicles and used cars. And generally, I mean, if you're going to change powertrain, you definitely should be test driving. So I think the world's going to be quite interesting because I think we'll see a complete conversion of the online experience and the offline experience, and we will make that completely transparent. There will be no difference between how we will operate online and offline. There is a difference at the moment, actually, and we're definitely going to put all that together. But I think you'll see the online operators becoming exactly the same as us, bricks and clicks, test drives, online, offline. If they don't, they're going to be, I think there's going to be a very interesting sit on the sidelines, open your sandwich box and watch, I think, for the next few years. I think the other interesting thing, I am more and more positive about being a franchise retailer. Really? The advantages of being a franchise retailer seem to be manifold to me. We are backed by global brands. I was watching telly last night and Mercedes EQ came on. That's a good thing. It drives traffic into our Mercedes dealership. So we've got these massive global brands investing massive amounts of money in technology to build fantastic cars. You can only buy new cars through our dealerships. You can online and then delivered from the dealership. So, the world is with supply constraints. Brokers are becoming very challenged in terms of them getting supply. Lease companies are finding it more difficult. The manufacturers want to funnel more and more traffic, new car traffic through the dealerships. And I think that's great news for franchise retailers. But actually what's happening in used cars is fascinating. And one of the slides in our investor presentation is, let's look how many used cars are on the web. Vertu PLC, over 8,000 used cars advertised this morning. Motorpoint, 3,000. Kazoo, 3,000. Cinch, 5,000. Yeah. There is an advantage of being a franchise retailer. We get access to manufacturers' supply of used vehicles. And a lot of the manufacturers, in fact, I would say all the manufacturers, are going to adopt in the coming years, and I've been talking about it for a couple of years, no one really believes me, closed loop retailing on used cars. They will do fleet business, but they'll do buybacks. They'll recycle the cars back through the franchise dealerships. They will not sell it to independent retailers if they can absolutely avoid it, because they want the retailer then to make a used car sale with a service plan to retain that customer into the network with all the parts, and then maybe upsell them into a new car later on and keep absolute control of the customer. You don't keep control of the customer if an independent used car retailer sells the car. You've lost them.
Yeah.
So I am really positive actually about that, and other things that make me very positive. Manufacturers are pushing the connected car. Yes. The connected car is fantastic for retail dealerships. You know, when my daughter got her new Fiesta, she wasn't allowed to leave the showroom before she'd nominated Durham Ford as the nominated local retailer. It was brilliant. And actually, I got a BMW recently, and similarly, I was hounded to make sure I put Durham in as the BMW dealership. So I think the connected car is a major advantage for franchise retailers. We get closer to the customer with the OEMs, and we'll have higher retention. And then when people say, oh, well, electric vehicles is going to be bad for after sales, well, there's very, very good evidence now that franchise dealer retention in service for hybrids and BEVs is much higher than internal combustion engines, because they trust the retailer to actually do it. So I am sitting here thinking, the world's going to be challenging. We're not going to be, this isn't a sustainable performance level. It will revert back to the mean at some point. But there's a lot of good reasons why we should be proud to be franchise retailers.
I'll come back to used cars in a second. I just want to quickly talk about new cars, because as we know, there are huge supply constraints. A friend of mine recently has just ordered a Land Rover Defender and has been told they've got to wait 12 months for it. How are you dealing with this, and how are you communicating this with customers?
Well, it's been the best thing that's happened to the motor retail sector for 50 years. This is not a problem. We have been in a position of massive oversupply.
Yes.
For years. I did some work the other day. I think it has reduced our gross profit at a group level by 2%. And you apply 2% to £4 billion, and it is a big number. And the profitability you're seeing now is because supply and demand is nicely in balance. People are willing to wait for cars. They're willing to pay good prices for the cars, because if they don't, they won't get one. And this is actually how, I'm not saying it should be as extreme as this, don't get me wrong, but I think we need to learn as a wider sector, and certainly some of the manufacturers are definitely learning, that actually producing one less than the market actually wants is a good thing. And reverting back to massive oversupply and margin destruction destroys our profit and destroys the profit of the manufacturers. So I think overall, this is actually a pretty good thing. There are some challenges with it, as you say, customer uncertainty on delivery dates. In fact, I'm getting a new car for my daughter on Sunday. It's about a month late. It's come in a month after her birthday, which when you're 17 is a bit of a blow, I suspect. But, the communication was actually very good. I was getting a weekly email, a weekly update, and if we're doing that to everybody, then I think we're doing the best we can, albeit, and I haven't had that many complaints on it, because I think everybody knows there's a problem on semiconductors. I mean, you'd have to be an ostrich, wouldn't you? Not actually understand that. So that's not an issue. One of the issues we've got, I think, is, with the pandemic reducing the new car market, and now with this global supply chain issue reducing the new car market, we are going to have a much softer after sales environment, because the park is going to be skewed towards older. We do older, but we've also got the newer element under warranty. So I think warranty will be under pressure, and I think we'll have to work hard to get the used cars sold with service plans to fill the gap. Interestingly, we did a digital marketing campaign in the first 6 months and did 10,000 service bookings of customers we'd never seen before, which I was delighted with. So there's things we can do about that, but there'll be an element of softness. But the other thing that we'll see with because of new car supply constraints, is even when the new car supply comes back, assuming demand remains at a reasonable level. So let's just assume demand remains at a level, and there's an interesting debate about whether that is going to be the case because the economy is creaking. It takes 3 or 4 years for margins to get back to normal, downwards.
Yeah.
Because you're never going to see them cars. In 3 years' time, we're going to have a lack of used cars.
Yeah. I know.
And you know that now. Nothing we can do about it. I can't go and make electric cars. So, there's going to be a tightness. And I looked the other day at, I think our margins peaked in 2010 at 12.5%. I think we're currently running about 11.8. And actually, if we didn't have more premium, we'd be back at 12.5. Actually, premium dilutes it, and it did take 3 or 4 years for it to get back to normal. And then you got a period where it was about 10.8, and that was the oversupply. So this margin destruction via oversupply is interesting. And actually, if we move to agency models, then that disappears anyway.
Well, yes, yeah, absolutely. I know. But I don't know about you, but I sort of think that this is possibly a big moment for new cars, really, because surely they've seen what's happening at the moment. Surely they're not going to go back to producing cars in vast volumes. They're going to reduce the number of cars they build and focus on the high-end stuff.
Yeah, maybe. I can see a logic, but there's a counter logic, which is they have very high fixed manufacturing costs. And therefore, the marginal cost of producing the extra unit is actually quite low.
Yeah.
And therefore, volume is everything to spread the fixed costs over a higher volume. So there is a little bit of an imperative, actually, for volume, isn't there? I mean, I've never run a car factory. I'm just guessing, but it seems to me that's how it works.
Neither have I. That's funny enough.
It does seem to me that that's how it works. And then you've got the political realities of not being able to close plants and having to maintain employment. And I think if you put those two things together, there is always the ability to oversupply. Now, I also think what's interesting is we are starting to see some fairly fundamental shifts in market shares in the UK in new cars. And I think that's going to continue. I actually think in 5 years' time, the market shares of manufacturers will look wholly different to it is today. So I think the Japanese manufacturers in particular and the Korean manufacturers are clearly going to benefit from Brexit. There was no doubt at all that the revised trading arrangements put them at an advantage compared to where they've been in the past. And when you start to think and talk to them about their volume aspirations, you know, that it's going to look very, very different. I think we're going to see a shift potentially away from European manufacturers to a degree into Asian manufacturers. And then you've got the likes of MG, haven't you, who are about 1.4% from nowhere. I mean, nowhere that they came from. And we've just opened 2 outlets for them.
Yes.
Cars look, you know, sensibly priced, electric vehicles, just the right point, I think, in the market. And it'll be very interesting to see where their share goes. And then when all the Chinese see how their share's gone, do they pile into the UK as well? So I really do think, you know, I think we're past peak Ford on cars, that's for sure. You know, that is not the Ford strategy, but I mean, Ford are obviously phenomenally successful in vans as well as cars. And, you know, I think we're having a very, very good time on Ford new cars at the moment, but it tends to be a different model range than we've historically sold. It's not Ford, it's not Fiesta and Focus anymore. It's Puma and Cougar, which is great, higher margin cars. So I think there's a lot of shifts that we've got to get our minds around.
Do you expect to see prices going up considerably for new cars?
Well, there's a lot of factors, and I wouldn't necessarily like to make predictions, really. I mean, commodity prices are high. That has to feed through. I certainly don't see new car prices coming down. Absolutely not. Commodity prices must feed through eventually. Shipping costs. I mean, I was reading this morning about Felixstowe. Shipping costs look a mess. So certainly from the Asian brands, they're going to have some hell of a shipping costs coming through. And then you've got the exchange rate. And I don't know where the exchange rate will go. I'm not a currency speculator, but it's a very important factor, I think. And then we've got where interest rates are. So I think there's lots of different factors. And you know, there is a hypothesis that we're moving into an inflationary environment. You know, yes, wages are going up, but the cost of living is going to go up more. We then might see interest rates go up before Christmas. They might go up again. Is that going to then choke off demand? Do we get rising unemployment? I mean, I don't know any answer to any of these questions, but they're interesting questions. And certainly there is risk of that, definitely, of that sort of inflationary spiral. And you can see in our results, I mean, in terms of the work we've done on pay reviews and things like that, we've never seen the like of that in the 15 years I've run this business. And to be honest with you, I'm not overly convinced I ever saw it at Reg Vardy.
Well, I was going to end on used cars, really, because looking at your figures, you've done a stunning performance, even with new cars, despite all the problems at the moment. But with used cars, is there are you going to have to start really focusing a lot more on used cars with new car supply getting worse and worse and worse?
I mean, we've always focused on used cars.
Yeah, but even more so.
I couldn't possibly focus any more on used cars. It would be impossible.
but particularly though, how are you being able to?
Because you don't. This is a nonsense question, James. With all due respect, because I can't focus on used cars because new cars, one, keep the manufacturer happy. Two, feed my service departments with PDIs, but also then with highly loyal customers, but crucially provide me with my used car supply. So actually one of our strategies, and we did really well overall with used car stock procurement, much better than I thought. I called that a little bit wrong, I was a bit bearish. We're short of used cars. And then counterintuitively, the answer is focus on new cars. Now, people don't get that, but it's absolutely true. Because the best place to find your used cars is in the new car database. And that's what we did. Yeah. So our outperformance on new cars was partly actually due to the need for used car stock.
How are you sourcing high quality used cars at the moment?
We buy everywhere. For
example, I see you tweet, because I do see you tweet saying I've sold such and such recently.
No, I have myself bought 2 used cars off people in the past 10 days.
Yeah.
I dropped my daughter off as a fresher at Durham University, and the chap who parked his car behind me to drop his son off, I fairly quickly realised he was getting a Kona on order, so I just bought his car off him while he was unloading it. His BMW, I just bought it off him. He lived in Cambridge, so we had to go to Cambridge to get it. And then I went to Burnley Football Club. I was there with my lad, and the chap on the table having lunch with us, who I didn't know from Adam, was selling his Discovery. So I bought it off him. So we have to have everyone focused on buying used cars. If the chief executive can buy 2 used cars in 10 days, why can't everybody else?
Yeah, yeah. Well, a lot of people are saying to me at the moment that they are being hounded by dealers for the best prices, but when they put the prices into We Buy Any Car or something like that, they get even higher prices.
Well, it's absolutely not true with us. If you look at the front page of our website, we pay £500 more than We Buy Any Car.
Yeah, but is there a massive battle going on at the moment to get people's used cars from them?
Yes, of course there is. Yeah. And my mother got another email from Crewe Vauxhall last night saying, could they buy her Corsa? So yes, there is absolutely, and we've got Sell My Car on the website. I mean, Arnold Clark are very proactive, and we've got new entrants, very successful new entrants actually. I think this motorway company that's set up have been very successful in taking market share off We Buy Any Car, and we buy lots of cars off them. So we will buy cars wherever we can find them at the right prices.
Yeah. Brilliant, Robert. As ever, thank you so much for joining us. Always good to have a catch up. Thanks for today.
Absolutely. Thank you very much.
That's it for today's Car Dealer Live. Join us again very soon. Bye-bye.